National Petroleum Limited, commonly known as Petronas, is Malaysia oil and gas company that was established in 1974. It is completely owned by the Malaysian government. It involves with entire oil and gas resources in Malaysia and entrusted with the responsibility in developing value to the resources. At the end of March 2005, the firm has comprised over 103 wholly owned subsidiaries, in which Petronas has at least 50% stake in the company. Petronas now has at least 3 subsidiaries that was listed in Bursa Malaysia, which include Petronas Chemicals Group Berhad. Other than operates as an investment holding company, Petronas Chemicals Group Berhad also the largest petrochemical producer and seller in Southeast Asia. They also provide port services, which provides product distribution infrastructure.
On 1st July until mid of September 2020, PChem company are having a downtrend line, with the lowest point below negative 12.7% compared to FPM KLCI, which has been shown intermediate performance. This may be due to the drop in oil prices, and these were headed for the weekly decline as the inventories start to rise and record-breaking new for the coronavirus cases in United States stopped concern about the pace of economic recovery and fuel demand. In the month of October 2020, the performance of PChem stock and FPM KLCI has shown a bit negative performance from before because of a political scenario that heats up and also as the pandemic of COVID-19 continues. On November, PChem stock performance start to show a more positive trend line, which reached the higher point at 27.9% compared to FPM KLCI, which at point of percentage 11.4% until mid-December 2020. On the 25th January till 2nd February 2021, it shows that the performance of PChem stock has dropped drastically from 20.3% to 7.6% compared to FPM KLCI, which just dropped a bit. This is due to the decision of Bursa Malaysia, who joined the key Asian markets to close lower on Tuesday. Then, it slowly starts to rise again and shows the highest point, which at the percentage more than 33%, as the crude oil prices advance, while Asian market were near record high. This is also maybe because Bursa Malaysia has extended its rebound on Friday after yet another positive session on Wall Street, and as many details of Malaysia's vaccination program has revealed. All this announcement. Lastly, on March to June 2021, it shows that the PChem stock are having an uptrend line with the percentage within 25.3% to 33%, while FPM KLCI keeps moving horizontally.
This market's main trend is upward. It shows a bull trend or an uptrend and step upward. Main trends typically endure more than a year and might even endure several years. The market is exhibiting a pattern of continuous highs and lows, meaning that this company remains steady and constant from September 2020 until June 2021. Investors can profit from growing asset price when the market is trending upward. One of the most effective strategies to avoid huge losses that can occur from a shift in trend is to sell an asset once it has failed to book a higher peak and trough. Trend lines are used by certain technical traders to identify uptrends and potential trend reversal. July through September 2020, the graph above shows a downtrend. Even though there is a bullish candle that is still profitable, the chart begins to decline severely on 7 July 2020. The secondary trend is a reaction to the main trend that is intermediate and corrective. Downtrends can be found in all time frames of trading: minutes, hours, days, weeks, months, and even years. As a result, traders hunt for strategies to spot a decline as soon as possible. Some traders prefer to trade both long and short. Therefore, they look for new trading opportunities in downtrends. Typically, this reaction lasts 1 to 3 months. The graph above shows a sideways trend. When compared to the bull and bear trends, this chart reveals that it has not changed significantly. From 8 April 2020 to 30 April 2021, the cadence did move marginally and modestly. The price of an asset trades within a stable range in this situation, with no obvious movement over time. A minor trend is a brief movement that can last anywhere from 1 day to 3 weeks.
By definition, a price pattern is a recognizable configuration of price movement that is identified using a series of trend lines and/or curves. Technical analysts have long used price patterns to examine current movements and forecast future market movements. Transitions between rising and falling trends are often signaled by price pattern. A chart pattern is a distinct formation on a stock chart that creates a trading signal or a sign of future price movement. Chartists use these patterns to identify current trend and trend reversal and to trigger buyer and sell signals. There is 3 types of price pattern, which is reversal, continuation, and others. Continuation pattern give an advance warning when a stock price is likely to resume its trend after a short consolidation period and how far the stock price is likely to move in that direction. Patterns are continuation patterns that form as the price of a stock moves into a tighter and tighter consolidation range. Patterns can be either bullish or bearish depending on what the trend was before the pattern began to form. If the stock price was in an uptrend before the pattern began to form, it is a bullish continuation pattern. If a stock price was in downtrend before the pattern began to form, it is a bearish continuation pattern. Patterns usually form over shorter periods of time. Flags are continuation patterns that form as the price of a stock pulls back from the predominant trend in a parallel channel. Flags can be either bullish or bearish depending on the trend was before the flag began to form. If the stock price was in an uptrend before the flags begin to form, it is a bullish continuation pattern. If a stock price was in downtrend before the flags began to form, it is a bearish continuation pattern. Wedges are continuation patterns that form as the price of a stock pulls back from the predominant trend and moves into a tighter and tighter consolidation range. Wedges can be either bullish or bearish depending on what the trend was before the wedge began to form. If the stock price was in an uptrend before the wedge began to form, it is a bullish continuation pattern. If a stock price was in downtrend before the wedge began to form, it is a bearish continuation pattern. Wedges usually form over shorter periods of time. A rectangle is a continuation pattern that forms as the trading range during a pause in the trend. The pattern is easily identifiable by 2 comparable highs and 2 comparable lows. The highs and lows can be connected from 2 parallel lines that make up the top and bottom of a rectangle.
So, I will start first with the simple moving average for 50 days. It is commonly plotted on charts and utilized by traders and market analysts. Usually, the SMA 50 days are used by traders to gauge midterm trends. It also can be used to place a trailing stop on an existing market. Moreover, the 50-day average is considered as important to determine whether the first line of resistance is an uptrend or downtrend. If the price moves significantly below the 50-period moving average, it is commonly interpreted as a trend change to the downside. Based on the chart given, it is a downtrend as the line resistance goes downward slowly. Green arrows from below is buy signal or bullish signal, meanwhile red arrows from the above is sell signal or bearish signal. Buy signals were in early October 2020, and early February 2021, while the sell signals were at the end of July 2020, end of January 2021, and middle of April 2021. This shows that Petronas Chemicals Group is doing very well and making some profit in the short term. We'll move on to the simple moving average for 100 days. SMA 100 days shows the average of closing prices of the previous 100 days or 20 weeks. It also represents price trends over the midterm. Based on the chart given, the green arrows from below is buy signal or bullish signal, while the red arrows from above is sell signal or bearish signal. As you can see, the gap between sell and buy signals is closer compared to SMA 50 days. For instance, the buy signals were in early August and November of 2020, while the sell signals were at the end of August 2020 and middle of October 2020. This shows that Petronas Chemicals Group is not doing so well and gives much profit in the long term. However, it can help investors see how the stocks have performed over 20 weeks and to find the price trend if it is upward or downward. Investors also use the 100-day SMA as support and resistance level.
The chart shown above double simple moving average for 50 days and 200 days starting from 1st of July 2020 for Petronas Chemical Group Berhad. As you know, double simple moving average are using crossover rule, shorter average and longer average term. From the chart, the shorter average represents 50 days moving average and the longer average represents 200 days moving average. By looking at Petronas Chemical Group Berhad double simple moving average, we can see there is a golden cross in the end of July 2020. Golden cross occurred when shorter average line crosses above longer average line. In technical analysis, golden cross indicating the potential for a major rally or also known as a buy signal. In the end of August 2020, shown a sell signal or dead cross because the trend is shifting down before going back to golden cross in the mid-November 2020. In short, it is suitable for investors to buy the stock from Petronas Chemical Group Berhad because there is more space between the shorter average and the longer average line, and it indicates the better the signal for investors to buy the stocks.
On the last day of trading, which is on 18th June of 2021, we can conclude that Petronas Chemical Group Berhad stock showed a good signal for investors. Technical indicators and oscillators that were used are MACD, ROC, RSI, stochastic oscillators, and Williams %R. MACD stochastic oscillator and ROC had shown a sell signal. For both RSI and Williams %R oscillators, it shows that investors should buy the stock. In conclusion, even though all the technical oscillators show different signals on whether to buy or sell the PCHEM's stock, it is proof that more oscillators stated in this analysis report advise that investors should be selling the stock on the last day of trading. That's all from us. Thank you for watching.